Is the lowest rate always the best option when you're shopping for mortgage products? And how do you know which one to select and what is going to be right for you? I am Erica Carlson. I'm with Bricks Real Estate and I sell real estate in the Twin Cities and surrounding areas. I like to make these videos and create these market updates to help you make the best decisions. If you learn anything new, I'd love for you to join my growing community. You can find me on Facebook, Instagram, YouTube. Of course, look for my professional pages. If you want to make a move to the Minneapolis area, just click the link I'm providing in the paragraph and then choose the first selection to set up a great time for you and I to connect or meet. So in just a moment, I'm going to show you my screen and the market update for Wright County in particular, but we will also touch on Hennepin County since I do border. These are my two primary counties that I work in. I'm always happy to provide other data for you. So if you want a market report in that same link I just mentioned, you'll see options. There's already one set up for Delano, St. Michael, Rockford, and Buffalo. If you want a different city or you want a very particular area, which is what I would prefer for you, please let me know. There's also a link that will take you there. So hopefully that will be helpful. At the end of the video, Molly Zimmerman from Bell Mortgage Bank will be here again. We've had her on in the past. She's going to talk about these loan products and what to be looking for and if that price and how does that play into it. It's always a complicated topic and I want you to be fully informed. So without further ado, let me pull up my screen. All right, this week I'm going to do this a little bit differently. In the past, I normally had kind of like a PowerPoint slide up, but I'm just going to show you the graph that I record the data in. If you're not familiar with my videos, I have been recording this data for a little over a year, maybe just a little bit past that point. And so it's really nice because I can now scroll up and down and just show you what I'm looking at so you can understand the data and how this would affect you. If you're home shopping, I hope this in particular will help you, but it will also help those of you that are selling a property or thinking about it. So just to explain my screen a little bit, I don't know when you're, of course, watching this video, but I'm recording it on February 21st. And today we have 436 properties for sale, total. No price point or anything like that is taken into account. 384 of those have no contingencies. And so, I do feel like a broken record because it's not like typically, our data doesn't like spike up or down really quickly. It's just these like slow changes. So I'm just going to go back and I want your eyes to be on column B, assuming you can see what I'm seeing. And the numbers were lower and a little higher, and they're just kind of bouncing around in this kind of 400 space, right? Like if we're just keeping numbers really simple. And it takes until right before Christmas time for us to hit back into the 500. So there was more inventory options then. So it's been in the 400s for, quite a while, almost, I would guess, 2 months. And we don't hit 400 again until July, but it's a high 400. And we keep going back, and now May 31st and back in the spring market, we can see this is spring of last year. Again, it's late February, and here we are now in the 300s, just hitting 429 when we hit March 7th. So I guess it tells you that it's pretty normal, right? Or our current sense of normal, right? So depending on when you last bought a house, would be like giving you that sense of perspective, right? Because my friends that have shopped in the COVID years, we're going to call those, that 2020 to 22, they're expecting no inventory, multiple offers. It really depends on the property, what you're going to run into. I like to call these houses cream puff houses. These are the ones that are spectacularly clean. They're very well presented. There's not a lot of issues on the disclosure or that are obvious to the eye when somebody is doing a general walkthrough. So a cream puff house is probably going to go into multiple offers because everything about it is great. And if you're listening to this and you have a house on the market and you're starting to internalize, well, what's wrong with mine? It's been on the market for a long time. It doesn't mean you should take what I said personally. It doesn't mean it's not clean. It doesn't mean that it doesn't appeal. But this is an expensive time for people to purchase properties, so expectations are very high. If I'm paying at the top on interest rates, not top like 1980s top, right? It's not 18% interest rates or even 11%. But again, let's think about the perception of the average consumer may have not experienced the 80s, right? Like a very young person wasn't even born necessarily. So everything is about perspective. And sometimes I love working with that kind of grandparent age because they do have that perspective and they don't see that the sky is falling versus some other generations. So I digress on that topic. Moving forward, pendings, they're moving up gently. You can see we're at 198 this week. A couple weeks ago we were at 170, but a couple weeks before that 160s, 150s. So the movement is in the right direction. If we were graphing this out, closings are happening. You are not crazy if you're thinking about buying and selling. Everything is about circumstances. It's not always about our fears or the economic things. That's a whole nother conversation, obviously. Closings are moving up, or they're kind of in the same, right? Because 2 weeks ago we were at 114, we're at 114. But again, we're looking at trends. There were more closings mid-December, late December, but we're looking at over time. Closings are happening, they're always happening. And we're looking at such a micro area. Like a county is a big area, but it's still a micro area, and a fair portion of our county is fairly rural. So as I've said many times before, we don't necessarily have the job support. Houses are spread out. People have more land a lot of times out here. So it's not apples to apples when we compare it to the city. However, let's go ahead and compare it to the city. And I love the data of showings per week per listing because it tells us how many people are out there looking at houses, not necessarily closing or making decisions on properties. But what we're seeing is about 3 showings a week has become the average showing activity on the 250 to 500K price point in Wright County. When we compare it to Hennepin, they're looking at more like 5 showings a week. And as I went into depth last week, it all depends on the situation. So if you're selling a house, and again, you're internalizing, I'm not getting 3 showings a week, I only got 1 showing this week, I must be doing something wrong. Not necessarily, because we're averaging things over time. You could have a house that just came on the market, your neighbor went up last week, they had 20 showings and you had 1, right? It's an average, so just keep that in mind. Of course, Hennepin County is moving faster. The population's higher, there's more jobs to be had, there's medical facilities, yada yada. So it's moving faster. We like these numbers. They're in the right trend because we were in the 2s, right, in winter. And I know it's winter. I know it's technically winter, but in our world, we call this the spring real estate market. And if you have been on the sidelines thinking, oh, should I move this spring? When should I move? I know some of you don't want to hear this, but your ideal time to get your house on the market is coming up. The last 2 weeks of March and the first 2 weeks of April are the highlight of our year in terms of top dollar and getting the most eyeballs on your house. Not that you can't sell your house at another time of year, but if you are looking for maximum, that is going to be my advice for you. So if it's February 21st when you're watching my video, it's time to put a move on it if you are really serious. Now, there are all sorts of variables that could affect that. I'm looking at historical data when I give you that advice. Days on market is like more where I expected it to see. Last week, I reported to you that average days on market in Wright County was 81 days. And that didn't make sense then, and it still doesn't make sense. So I don't know what threw the data. I'm imagining somebody who had a very expensive house, or maybe a couple of them went into pending and it changed the data for 1 week. It is not a trend over time. It didn't even trend out this week. We dropped to 40, and it's because when I pull data, I look at pending. So if you are a real estate agent wondering, where is she coming up with this that doesn't support what I'm seeing? If you are looking at the MAR or the SPAR data, they tend to be behind. You want to look at pending data to get a more accurate reflection. I only go back 7 days to pull this data for everybody. 17 days is the median. if I had to guess for you without seeing your house, that's about where I would expect it would take for you to sell. It could take 40 days. That wouldn't be the end of the world. But you should not be mentally preparing yourself for, I put it on the market on Thursday and it's sold on Friday. It could. It's not impossible. It depends on your price point. It depends on so many factors that we can't get into in this video. But if your house is filling like what we're going to call an extremely average pocket, which is average would be 300 to 400K, you can expect it to go really, really quickly if it's very clean, very lacking issues that someone else is going to have to absorb, because then you can market your house to lots of buyers, right? Cash buyers, FHA, USDA buyers. Those are government-backed loans. They need a house with no paint chipping, no safety issues. So the problem is when we say, I don't want to do a single repair. I want to put my house on the market exactly the way it is. You have every right to do that. However, you are shrinking your buying pool, not just based on people who are willing to do projects, but people who actually can qualify for loans. And I don't think a lot of people understand that component of real estate because it's not common knowledge until you talk to an agent and we go, that's fine, but you can't appeal to this type of borrower, this type of borrower, this type of borrower. We have ruled those people out completely because they will need your support. On the flip side, if you are a buyer with a government-backed loan, VA, USDA, FHA type of loans, I absolutely love helping people with these various types of preferences, but we may need to be more creative. So again, I'm not gonna not show you those houses that may have those issues, but we're going to have to be creative because if the whole house has chip paint, we may have an issue during the appraisal process that we would like to avoid for you, of course. So I think I'm going to take a break there on the data talk, and I did get a little bit more long-winded than I intended. I'm bringing Molly, fantastic loan officer. She's local. She's somebody you can meet in person if you want to shake a hand, sit down at a coffee shop. That is the benefit of working with us, is we are in the area. That is why I make videos very much for my own neighborhood. You can see I'm not trying to talk to people, let's say in the St. Paul side, because that isn't my backyard. I live in Wright County, and she's right on the border as well. So we are people you can meet and talk to and connect with in real life, and we're happy to do that. So let me bring Molly on right now. Are going to talk about something really important, because I think when we think about mortgages, number one, Molly, I know you've been doing this for a long time, but people are generally really overwhelmed by this topic. They don't know what questions to ask. And I think we focus on interest rate a lot. We don't think about all those other little details that, well, they're not little, but they're details, because it feels like interest rates always like the overwhelming thing, and I'm sure you've had many people call you and just say, what's the interest rate?
Absolutely.
Not the only part of the conversation. So the big topic that I was sharing at the beginning of this video with everybody is like, is the lowest rate like the best, and how do people, navigate this with you?
Yeah, and that is a really good question. When I meet with buyers, I think that's something that I like to touch on really early on, because I think as a society, we're just really programmed to think that the lowest rate is always the best. But as a lender, I'm actually looking at a rate sheet. So I've got, your market rate, which is like your par rate, quote unquote, or you can actually buy a lower interest rate, but it does cost more money to buy those lower interest rates. So I think being able to look at a couple different rate cost options and then weigh out that, I like to look at a break even point. So like, how long do I have to be in this lower interest rate to make sense of me spending this extra money up front? So those are kind of the steps that I take with my buyers. And I mean, a quick example of that would be like, let's just say that you have a $300,000 loan amount. Maybe you're paying a point, which would be $3,000. That would be 1% of your loan amount. And you're getting a lower interest rate, saving $100 a month. But does that make sense? So if I do the calculation, I take that $3,000 extra in cost, divided by the $100 monthly payment reduction. And in my mind, you'd want to be in that loan for 30 months before it actually makes sense for you to buy that interest rate down.
Sure. Yeah. That's a lot. Yeah. And that's why they need to work with somebody individually. There's,
Mhm.
when it's just this generic question of, what's your rate? And then I'm going to
Yep.
call loan officer B and it's what's your rate? And it's like, it's not nuanced enough, to understand and we've talked about this before. It's what's your monthly mortgage? Not,
Mhm.
what's just the rate or the other thing. And I know this wasn't exactly the point of our conversation, but piggybacking off of it, it's like people get so caught up on the price of the house. Well, if
Mhm.
rates go up and rates come down and this, property A has a higher tax rate than property B, and now you're switching to townhouses and condos, and now we have association. It's like all these things are changing. And so it's always nice before you write an offer to say, hold on, this house, before I write this offer, I love it, but if I offer this, what's my actual payment going to be? And there's still caveats, right, Molly? Like there's still an estimation in that. Am I correct on that?
In terms of like the
Well, like
price points, is that
you
what
don't
you're
know
referring
their
to?
exact homeowner's insurance as an example.
Correct. Exactly. Yeah. So I mean, like for me, if I'm looking at a property, and this is an exercise that I say I do with the majority of my buyers, they will send me addresses to run numbers on. And first of all, I'm going to run, I can see what the list price is. They may say, hey, run it at list price, run it $20,000 higher.
Yeah.
I also take it a step further. I go directly to the county website and see what I can pull for tax information because I feel like a lot of listings don't necessarily have the most accurate information.
Correct.
So my numbers are only as good as the information that I'm given. And
Mhm.
then for home insurance, one thing that I notice on especially like online calculators is they way underestimate what homeowners insurance typically runs. So
Yeah.
I try to use a very good number for home insurance. Maybe it might be even a little bit high at some points, but I'd rather estimate too high than too low and
Mhm.
have that shock of the payment coming in, somewhere where it's just not expected to fall. So,
Mhm.
um, yeah, I mean, and everybody's situation is a little bit different. So, like, talking to a lender about your options and what your buy downs might be, how long do you think you're going to be in the loan is I think another huge question right now because in this current rate environment, our belief is rates are going to go down in the next 1 to 2 years. So I feel like a lot of my buyers are not doing buy downs right now because they do feel the idea of a refinance is probably they're probably going to try to do it in the next 2 years if they can.
Right.
So just I mean, it just has to be tailored to your situation and talking to somebody that can break down all those numbers and explain it all to you in detail, but in a way that you can understand. So simplified detail will help you make that decision.
Yeah, and just when you said that, I was like, "Oh, I have an idea for a future video that I think we should walk through on a screen, like actually how to use the Zillow or those types of mortgage calculators and point out the gotchas, I guess, in those because I know I've worked with people where even though they have a preferred loan officer, they still prefer to use the online mortgage calculators. And so I'm thinking the educational piece of if you're insisting on using one of those, then here's like a way to enter the more correct information and then and maybe some more accurate resources. So if they don't catch anything else from our talk today, I hope that they'll like pause before they just say Zillow says here's the mortgage payment.
Yes.
In my experience, that number is far too low for the reality. I mean, maybe there's been times historically where it's more accurate, but in I would say the last 6 months that I've been paying attention, extremely off. Like not even getting you in the ballpark of the reality. Because if you're not putting in the right down payment, you're not putting in the right loan type. I mean, and then again, like you said, what's your homeowner's insurance? Are you putting in the right number? There's so many things there. Is there anything else that we were going to touch on today?
I mean, I think that's the biggest thing is just,
Yeah.
it's more than the interest rate. You've got to look at how much am I paying for this interest rate? That's
Right.
probably a bigger question to be asking, not just what is your interest rate. which
Okay.
is exactly why it's hard for like me as a lender. I don't like to just quote without having a better picture of somebody's scenario, and then I can dig deeper into it.
Absolutely. Well, if they want to get a hold of you, in the link that we have provided, at the bottom it says get pre-approved. That's how they get to your website. I'll put it up on the screen as well. It's really easy to remember. It's your first and last name.com, mollizimmerman.com. Or you can call me and I will connect you to Molly directly. I, there's I love having like a three-way conference call on the phone so we can navigate these things together. You don't have to do these things alone. So thank you so much for joining me, Molly. And then I know we'll see you in a couple weeks.
Thank you.
All right. Have a great week. Thank you, everybody.